Breaking news and a massive update. Jake Claver just explained a $1,000 XRP. And during today's episode, we're going to highlight the catalysts that are necessary in order for the XRP community to experience these dramatically higher price targets. From a supply shock with ETF approvals to the reverse carry trade creating massive demand for XRP, we break it all down throughout today's interview. I would encourage everybody to stick around for the entire episode as we also break down the prospect of BLACKROCK launching an XRP ETF in the calendar year of 2025. We've heard major predictions of XRP reaching $100 or even $1,000. Jake clearly outlines how we can get there. And with that being said, if you enjoy this content, smash that like button, subscribe to the channel as you're going to get an update every single day. But with that being said, let's dive right in. Now, Jake, if we could just dive right into it, I think it'd be really important to just outline what are your beliefs when it comes to the reverse carry trade and the domino theory that everybody knows you for?
Yeah, absolutely. So it's starting to play out now. You've got, the yield curve coming up substantially over there in Japan. The bond rates are back at levels that we haven't seen in 20 and 30 years. I watched the 10-year. So we're back to like 1999 levels on the 10-year, 1.17, 1.18. I said the danger zone was going to be like 1.15 to 1.16 or 1.6. We're up at 1.8 now. So we're past that. We're absolutely in the danger zone. But it is more like boiling a frog at this point. So it's moving slowly to the upside. We haven't seen an abrupt move to the upside that would cause Japan to have to aggressively raise interest rates to meet, where they're at for things. So people might not understand some of this. There's a lot of lending that's been done over the last 30 years. Basically, if you could borrow from the Bank of Japan, you did, because their interest rates were zero. And at some points they were negative, like they would pay you to borrow money, which sounds crazy. But when you're trying to stimulate your economy out of stagflation, like you try whatever you can. And so the problem was that they didn't mandate that people use that yen that they were lending within their own economy. They then took that yen and converted it to other currencies and put it to work in other markets, or they used it to buy US treasuries, which would be like a 5% risk-free return on free money. Like, why wouldn't you do that? And so Japan, a lot of the people there, they have the largest foreign debt holder of the U.S., $1.6 trillion worth of U.S. treasuries there in Japan. And so, at this point, a lot of those loans were variable rate. A lot of them have to be refinanced. And as the interest rates have come up, there's been people that, put that money to work somewhere where it's no longer making sense. And at some point, somebody's going to yell fire in the theater and everybody's going to run for the door. We started to see this happen last year in August. I think it was August, 14th, somewhere in there. We saw 13% down in the S&P in one day. And the reason for that was the reverse carry trade was unwinding. Bank of Japan had raised interest rates aggressively over the last two periods when they come out, just like the FOMC, they come out and talk about what they're doing for economic policy. And they raised 25 basis points and then another 25 basis points. And if you're doing that off of zero, like that's a very drastic change. It doesn't sound like that much. 25% of 1% doesn't sound drastic, but when it's from zero, it is. And so, some things where the margins were thin, people weren't making money anymore. And at the time, markets were coming down because of tariffs and other things. And so, we saw a big drop off there. But then the Bank of Japan came out and said, whoa, we're going to hold interest rates, which they have since August of last year. But now we've got our Fed coming down with interest rates. And luckily, the stock market has continued to perform well over this period of time. So a lot of that money is still being put to work there because it makes sense for that trade. But as these rates continue to rise, there's going to come a point where the trades no longer make sense. And again, it's only going to take one person like Peter Thiel, when SVB, Silicon Valley Bank, went under, it was because he pulled his deposits. And then everybody else found out about it and everybody else made a run on the bank. It's going to be a very similar situation on this. I think it's going to be a spike in oil that's going to cause the reverse carry trade to finally unwind. And you're going to see a big move to the upside in the Bank of Japan. They're going to have to raise interest rates aggressively to mitigate inflation in their economy. When energy prices go up, so does the cost of everything else. And so in order for them to combat that, they wouldn't really have much recourse. And they're already at a tipping point. So if we had conflict in the Middle East between Iran and Israel, escalate, one of the trade routes get cut off, Strait of Hormuz, we've got some news there that, they've seized a ship if something else were to happen and they cut off that trade route, that'd be like, 33% of global oil supply restricted immediately and cause WTI crude to spike. That would absolutely cause the reverse carry trade to unwind and everybody to pull all of their trades off of these markets. And it's not going to matter where your money is, stocks, commodities. I think you could see gold fall back to 2000 or 2100. There's going to be a 50% haircut across everything, in my opinion. It's going to be a complete repricing. So we've just seen, go ahead.
Jake, let me ask you a question on that. So think about that, right? I agree with you that if this thing unwinds, we get a crashing of all assets. But with crypto being a risk on asset, that's usually the first one that goes away, right? So why? So do you think in that situation, would crypto go up or wouldn't crypto go down in that situation?
Crypto's going to go down with everything else.
That's what I think.
And then there's going to be unrealized losses on the back end of the stock market because they don't trade real time. They've got these Bitcoin ETFs and these other ETFs that have launched. They trade and settle T+1. So they're going to have huge unrealized losses, and they're not going to have any place to pull that excess liquidity from to cover those because the rest of their positions are going to be down as well. So the banks and everybody else are going to be underwater. They're going to need something on their balance sheet that escalates in value substantially. And so this is kind of, the cornerstone of my theory is you have the reverse carry trade unwind. You have treasury bills flood onto the market as they swap from U.S. treasuries to the Japan treasuries. Mm-hmm. And then all of those flood back here to the U.S., which would be horrible. Like if they had let this unwind before the stablecoin bill had been passed, we'd have economic Armageddon. Like it would have been awful. But now that we have the stablecoin bill passed, the Genius Act this summer, they estimate, total demand for stablecoins here in the U.S. around $2.3 trillion. Well, guess what happens to be the amount of global outstanding debt? About
$2.3 trillion.
Just transfer that bitch right over, right?
So, we'll have all the banks launch their stable coins, which will shore up the bond market because that's the backbone to the global financial market at this point. If we let that collapse, everything else goes under. So that's shored up. But now you're going to have additional pressures on the exchanges, additional pressures on the stock market, Bitcoin ETFs. I just saw a muni bond that was launched. Eleanor Terrett put that out. They've made an allocation to Bitcoin through a muni bond. That's needs to be low risk capital being put to work.
Correct.
Not high risk. And so now we have pension funds, hedge funds, sovereign wealth funds, institutions. Pretty much everybody has some allocation or exposure to Bitcoin at this point. So you have huge unrealized losses there. And they need some way to be able to de-risk from that. The only way that they're going to be able to do that is to be able to settle the back into the stock market real time. In 2022, Project Ion, which was a partnership between the DTCC and R3, was finalized. The primary settlement mechanism for R3, Corda, is XRP. And so if they, push this along with the launch of these ETFs, and there's no supply for XRP on the market, they could push the price to a lot of the price targets I've been talking about, 3 or 4 digits, which would then allow them to be able to facilitate the back-end settlement of the stock market. And when I was at Swell just a few weeks ago in New York, the president of NASDAQ spoke with Monica Long, and she just happened to say that the first place they're going to be using instant settlement distributed ledger technology is on the back end of the stock market to be able to reconcile those trades. Isn't that interesting? So anyway, this is a long time coming. I've had this theory out for almost 18 months now. And I think we're right here on the precipice of the domino theory playing out for everybody.
So what's great about that explanation, Jake, is I think it answers the majority of the questions that we have. And I'll just mute you for the time being so we don't get the echo. But it answers a lot of the questions that we have about how the global picture is being painted before our very eyes. This thing that you're outlining is so much bigger than XRP. It's honestly much bigger than cryptocurrencies in general. And we just happen to be in this really unique situation with this really unique asset. Now, obviously, we're not as privy to the global economics as you are. And you look at the decoupling event that the XRP community has been speaking about for the better half of a decade. This is a narrative that's been around since 2017, prior to that initial bull run. And what I think coincides about these two really interesting narratives is the collapse of Bitcoin and some of these traditional stablecoins like a Tether and the rise of these more open and generic decentralized networks, kind of the idea that we were always supposed to be working towards in the first place. So my question to you is, why is XRP the token you believe they're going to choose? Now, I think there's a lot of different reasons for this, but why wouldn't they tap into anything else besides XRP from your perspective?
I mean, you got a lot of news out there from R3 about Solana. Solana's, being used in certain applications, and people are building on that network. You've got the EVM, Ethereum-based or Polygon stuff. There's a lot of other good blockchains out there. So to your point, why would you choose XRP? Well, the lawsuit. Until we have the Clarity Act passed, which is now been kicked down the road because of the government shutdown, we really don't have clarity on these networks and how they're going to be treated as far as taxes or if they're commodities or currencies. We don't have designations for them. We know that the SEC has now moved to a favorable stance on the asset class as a whole, but the only asset that has full clarity as not a security is XRP. And so it's my belief that if there is a liquidity crisis prior to that bill being passed, the only option that they're going to have, if there's also enough liquidity in the asset, is going to be XRP to save the day.
Is it a make or break situation from a OTC standpoint? Because we know there's about 30 billion. If you include the OTC desk, $30 billion in value. Now, to some people, it sounds like a huge number. To those in the know, like yourself, it's a small number. And so with these ETFs, with the Clarity Act, with this event that you're talking about, what does it mean for the XRP price? Why do you get to the arbitrary number of 3 digits or 4 digits? How do you get to these numbers?
Demand, right? So it's just a math equation. If you weren't going to settle the back end of the stock market, you would need enough liquidity to be able to do that. And I believe that's where they're going to push it to in order to be able to facilitate that. So that's $5 or $6 trillion a day in settlement. You're also going to have the FX market slammed in Japan, which SBI is a large contributor there. And we know that they're a fan of Ripple and R3 and XRP. Yoshitaka Kitao has touted XRP multiple times as his favorite asset. So if you needed a liquidity buffer for the FX market, for all of those transfers swapping back to yen, that's another demand point that they're going to be utilizing the asset for. You've got all these ETFs launching at the same time. We've already seen the largest inflows that we've ever seen on ETFs for spot products in crypto. The first 4 or 5 days here that we've had, just a couple ETFs for XRP open and trading. That's already eating into the OTC desk. Okay. Now there's OTC and dark pools. So that's going to be people's argument. Well, we haven't seen the price move. It's actually going down. Well, you are correct, because they're buying over the counter and they're buying out of the dark pools. But once those are depleted, they will have to go to the exchanges. And if there's implications for Tether and Bitcoin at the same time, and the exchanges need XRP, you have the Shane Ellis theory also play out at the same time, where they start using XRP in that capacity. So that everybody needs it all at the exact same time, and there's not enough to go around. And that's the situation where we see a huge move up in price that people just, I don't think they're ready for.
I want to give a huge shout out and thank you to everybody. But first of all, big shout out to Jake for joining us tonight. If you're enjoying this content, smash that like button.
In terms of the premises of you've gone on and said, hey, we think $100 by the end of this year. So I wanted to probe on that, because our community is like, Jake saying it's going to be in December, $100. Okay, maybe it is. My question is, hearing what I just heard you say, is your premise that, one, the stock market obviously adopts XRP as its back end, and B, you said something important. It happens before the Clarity Act. So is that one of the key things that needs to happen? Is because that's a good clarity. So in other words, if we get the Clarity Act and this doesn't happen, let's say XRP doesn't get adopted, then your idea of this thing going to 100, does that kind of go away? Or help us understand what you think?
It would be difficult to get to those levels if this is a perfect storm scenario that I'm discussing, right? And I think people have a hard time with that. I'm extremely confident that it plays out. I see all the writing on the wall. And it's interesting to me that we had a government shutdown that delayed the Clarity Act being put through. And now they're discussing maybe it's going to end up being Q1 before we get the Clarity Act. And then we've got, Brian Armstrong saying that it's going to come out within the next month, maybe even by Thanksgiving. So you've got a lot of things that are up in the air here. But to your point, for this situation to transpire, it would have the caveat that the Clarity Act had not been passed yet.
Okay, that is huge, because then that leads me to my next question. Sorry. So if the Clarity Act does pass,
yep,
what's your thoughts then? Does the whole thing in your mind kind of like go away, or do you think like what? Because now they can go with any coin they want, right? And now XRP.
Well,
what's your thoughts there? I'm just curious.
I don't think that's going to happen.
Gotcha.
But there's some other viable options out there, right? You also have some other interesting aspects that are specific to the XRPL and Corda for that application and the use of that token versus other ones. You've also got, you've got digital identity on the XRPL. You have credentials on the XRPL. You have AMMs on the XRPL. These things aren't built into the mainnet on Solana. They don't necessarily want KYC and AML and accreditation and some of the other things that are required for institutional adoption. Now, you can add additional components inside smart contracts and build that out, but it's not inherent to the network. So, that would be one thing. I mean, XDC is another token that could be used by R3, right? They've advocated for that. I'll say this. So we had a project that we did with R3 years ago. Still talk to them infrequently. I bring my mug on my show every once in a while. And in that conversation, I asked them, what we should use for the settlement mechanism between counterparties for what we were working on. And I have NDAs about what we worked on, but I can talk about, the other pieces of the conversation we had. And they said that, whatever they used would have to have clarity and there would have to be enough liquidity in it. And at the time, the only thing that had clarity was XRP, and it was kind of a wink and nod that would be the better option. So, if the Clarity Act passes, there could be other options, but I'm pretty confident that there's powers that be that might want XRP to be in that position before that legislation's been passed.
So I want to talk a little bit about the Ripple escrow, but since we're referencing the ETFs, let's get into the Evernorth Treasury as well. Everybody's talking about the supply shock. There's going to be so much demand because of all the different catalysts that you've outlined. Where does Evernorth and the Treasury company fit in your eyes? Because in my eyes, I think this is really important. And listen, there's no NDA between me and Johnny. We've talked about when this thing goes live, we're going to buy some of this stuff. And we've talked about it on the show. So I think that's pretty interesting. I'd like to hear your perspective. Some of the private conversations you've had, a lot of them have probably been focused on ETFs. When you think about the Treasury company becoming successful, there's going to be dozens, if not hundreds of other companies that implement similar strategies. How does this factor into your entire theory?
Yeah, so I was on a panel with Hugo and Vivo Power there at Swell. This is a side event that our boy Ray Fuentes threw. Shout out to Ray. Love you mucho, my man. Anyway, he put a great event together, but Vivo Power is actually buying XRP at an 82% discount from Ripple off the market value, which I thought was very interesting. So you're actually getting a 4x on the NAV if you're investing there, which is actually pretty compelling. But aside from that, Evernorth is raising $1 billion. They've got strategic investment from Arrington Capital. They're leveraging his fund. They've already converted AACI over to the new ticker, which I think is in XRP. And which is unusual, by the way. You normally don't convert the ticker prior to the deal being done, but they haven't finalized this back. So, I think that there's just going to be additional demand there. What I'm excited about, and I got to hear, we talked with Ashish a little bit while we were at Swell, didn't get too deep in conversation, but to listen to him and David Schwartz and Arrington talk on stage, they're going to be seeding DeFi protocols on the XRPL and looking to generate, seed these pools to be able to develop that part of the ecosystem, which I think is fantastic. That's also something that we're looking at with Digital Wealth Partners, which is our wealth management firm. We manage almost $1 billion in XRP today, very similar to them. And, we have different mechanisms to be able to generate yield that we're also working on. We're working on other financial products that they might be leveraging at some point to also be able to generate yield. But that's what I'm excited about for them is the opportunity to partner with them or work with them in some capacity to continue to build out and innovate on the XRPL and seed these DeFi protocols with, some of the amendments that are going to be passed. You got 64, 65, and 66 that are coming to the network that should be voted on probably in December this year. That'll be pseudo accounts, liquidity pools, and borrow lend native on chain to the XRPL. And that's also something that institutions absolutely are going to want. But there's some other securities laws and compliance that come along with that. But I think really excited to see their strategy and how aggressive they've been aggregating XRP while the price is still low.
When you think about where the XRP community could be by the end of the Trump administration, we're not going to go all the way to 2030, but think about 2028. Where do you think the XRP end game is there? By the end of the Trump administration, what is XRP's value and what is the role that Ripple is playing in global economics?
$50,000 per XRP is my guess around the end of Trump's term. And that sounds crazy. I'm fully aware. Okay. The means by which that happens is Ripple and what they're doing along with other people. The end game for the XRPL is derivatives. And if you want to quantify the derivatives market, it's currently somewhere between $400 quadrillion or $400 trillion, excuse me, and $4 quadrillion. Like, I don't know if you can count that many zeros, but that's a lot of zeros. And there's only 100 billion XRP, which sounds crazy to say there's only 100 billion XRP. But we won't be all the way through the escrow at that point either. We'll be close, especially if Ripple continues to, only put out 200 to 300 million per month onto the market. They'll be re-escrowing the rest of that on the backside of that. I think that they'll continue to do that, or whoever ends up with the escrow, I think will continue to steward it in that fashion. They'll only put out what's needed in order to be able to maintain price stability for whatever duration they need to before there's another step up in value. But if it is used as a ledger and collateral, so my other prediction is that once we're over 4 digits, the BIS designates XRP as a tier 1 asset, which means it will be able to be used as collateral for derivatives. Currently, that's only gold and US treasuries. So that's even more demand to lock up XRP and have it used or just sat there as the collateral for the derivatives. And if it's settling the derivatives market at scale, that's a ton of liquidity that's going to have to move through the DEX and the asset to settle all of those trades. And you need that. Right now, banks and institutions can't quantify their exposure. That's why we had 2008 happen. They were over leveraged. And we're there again today. There are plenty of things in the derivatives market where banks are overexposed. And when the liquidity dries up, they're going to be swimming without shorts. And that's not going to be good. And if there's not some recourse or a way to be able to fix that, it's going to be a bad deal. So I think that that's the long game. I heard Ripple, or not Ripple, but Brad Garlinghouse speak at CoinAlts in 2023. And it's not recorded. Actually, I think Ray Fuentes did record this one sneakily. But he had a keynote with Jack McDonald. And in that keynote, Brad talked about when he got to Ripple, and they had 3 products. They had Global ID, they had the payments and remittance product, and then they also had Codius. And I don't think Codius ever really went away. I think it's still there in the background, and I think that that's their smart contract platform that'll eventually be rolled out for derivatives and that application, which will, again, exacerbate the value of XRP to around $50,000 toward the end of Trump's term, in my opinion.
So just to harp on the data and analytics of it, right? Because a lot of people are doing the math. They're like 100 billion times 50,000. I'm not even sure what that number is. So explain the market dynamics of how the token could actually get there, because people think you're going to need, let's say the token gets to $1 trillion. There's a misconception that you need $1 trillion to come into that asset class. Now, on our program, we've talked about this for years, the market multiplier and all these things, but I'd love to hear you kind of share your take on that and explain it to people who may not understand that.
Yeah, so in stocks, that makes sense. All of the stocks are liquid and tradable at any time. In this market, these assets, you have total supply, you have circulating supply, and you have available supply. And so if you're looking at available supply, like we talked about earlier, it's really not that much in comparison to the total or circulating supply of XRP. And if you want to go back, Robbie Mitchnick actually put out a calculator, who is the head of digital assets at BlackRock for a period of time, that showed that XRP would work, really well at $10,000 per XRP. And you might go, okay, well, the market cap is astronomical at that point. That just doesn't make sense. And in the context of a stock, it wouldn't. Most people want something analogous to something else in order to make decisions. But to your point, $1 in doesn't equal $1 out. So my example on this, and this is crude, this isn't exactly how this works, but it's an easy illustration for people to understand. I mint Jake token. Okay. I mint a billion Jake tokens. It gets listed on Binance, and my mom buys 1 Jake token for $1. What's my market cap?
Billion.
Yep.
There you go. That's the simplest analogy. And go ahead, Jake. Sorry.
Yeah. So anyway, you can see how that can get wonky very quickly because people think that that amount of money has to move into the asset when it's really just the total outstanding number of the asset at the current trading value or what somebody's willing to pay for it. So, yeah, the market cap is going to look bonkers on this thing when it's at these high values. But this is also a protocol. And I don't think people understand that either. Like, imagine you send $1 every time you send an email. How many emails you get a day, Johnny?
Oh, forget about it. I'd be retired already.
So if you can imagine how much data is moved around at scale globally, it's the same amount, or probably not the same amount, probably more value that could be moving around every single day. When we moved from mail to email, like if you were really getting it back in the day, you probably sent like 20 or 25 letters a week, right? I get 20 or 25 emails in the first hour every day. And so just as a comparison, so that's the other piece of this that I don't think people are comprehending either is the volume of payments and the pace at which money is going to move is going to be exacerbated exponentially in comparison to how it moves today with all the frictions in the banking system. So again, you're going to need ample liquidity for all of those payments to settle real time in that circumstance. So, and if it's a global infrastructure that's providing that, the market cap of the asset that's going to be providing that liquidity is going to have to be pentillions of dollars.
Well, that's the key, right? The liquidity has to be, like you said, you buy it for $1, but someone goes to sell $2, it crashes. Right? The liquidity.
Right. Well, and that's the other piece. You need it to be a stable value. If you look at the indexes in the stock market, it takes billions of dollars to move them 1% either direction, right? And you would want that for a high value, quote unquote, stable coin. If there's going to be large fluctuations in the amount of liquidity moving through it at any given time, you need it to be a high stable value that isn't impacted or completely, crashed by billions of dollars or trillions of dollars moving over the network or being bought or sold at any one given time.
I want to go into the ETF topics with the OTC desk because I think this is something people don't fully understand yet. What we're witnessing right now is about 11 million shares of XRP be taken off the OTC desks and off the exchanges and put into the hands of the ETF issuers. Now, for the time being, we're focused on inflows. Maybe there'll be a day and age when these ETFs are dumping more than they're purchasing. But for the short term, as these products go live, there is a supply shock moment on the horizon. And it starts with Franklin Templeton, and then it's Grayscale and Bitwise and Canary Capital and every other ETF filing that we've seen over the last couple of months. But I'm waiting for 12 or BlackRock. Let's go right to that, actually, because again, people want to talk about what could happen to the market if BlackRock launched an XRP ETF. I can tell you, me and Johnny, when we talk off air, this guy won't stop talking about if BlackRock files, it changes everything. So I want to hear your perspective on this. First of all, why would it change everything if BlackRock files? Because people just don't know. Why would that be a big difference for you? And do you anticipate they're going to end up filing for an XRP spot ETF?
There's been a couple different instances where both Brad Garlinghouse and Larry Fink have been asked about a BlackRock ETF. Both of them said, I can't talk about that in those interviews. So it tells you there's something, there's a there, an NDA, something in place that they can't discuss on an open public network. So we'll set that aside. 2024, actually 2023, about 2 years ago, almost to the day, 11/14, we had a Delaware filing for an iShares XRP Trust ETF. They have to file a trust in Delaware in order to be able to hold the assets, to be able to accumulate them and support the ETF. Okay. Bloomberg came out and said that was fake, and then it was swept under the rug. We never had BlackRock, we never had Ripple, either one come out and say that ETF filing was fake, which is very unusual. There has been one or two other ETF filings and that were fake, and immediately both the token and the people that supposedly filed it both came out and said it was fake. So for them, neither one to come out and say that and only Bloomberg report on it, which the reporter that reported that was also at Swell the last 2 years. Very interesting. Eric, he's a good guy. I like Eric. But anyway, so again, just another piece of the puzzle there. Interesting that 2 years ago that would pop up and then the DOJ would investigate and we never heard anything about it. If BlackRock throws their hat in the ring, it is a huge approval and step forward for this asset, like gigantic. I think that you're going to see them and potentially Vanguard. Vanguard actually did not do anything with the Bitcoin ETFs. They actually forbade all of their subsidiaries and anybody that's associated with them from selling any of the Bitcoin ETF products, which was also interesting to me. If you look back, there's some correlations between Ripple and Vanguard and some other things. I don't know if you have that graphic or not, Abs, but that's a good one too. So anyway, they tend to be the cheapest on the fees. They did a 25 basis points or 0.25% on the Bitcoin ETF, and they aggregated a ton of Bitcoin. And then they moved all that over to Anchorage from Coinbase because of institutional custody at Anchorage. There you go. There's the Vanguard. I knew you had it. So it'd be interesting to me. I think that those are two other outstanding ETFs that we might see throw their hat in the ring here for XRP. And if we saw inflows from both of those, imagine the institutional demand from all of the counterparties for Vanguard. They have no exposure to crypto. They have none of the other ETFs. And now they have the XRP ETF products that they can allocate to. I think that we would see huge inflows from all of their counterparties as well. That would, again, just exacerbate how much XRP was taken off the market.
So when you were on the Paul Barron show, and we often play this clip, you talked about $10 to $12 just on the ETF demand alone. What are some of your thoughts on that? Do you stand by that $10 to $12 just based on the ETFs, or is it going to take, because this is what me and Johnny have said, our theory, now it's no domino theory, it's an ETF theory. We thought that all these ETFs were going to get approved right around the same time, 3, 4, 7 days from one another, and you were going to get that kind of snowball effect that you just gestured at. I'd like to hear some of your thoughts on that.
Yeah. I think all of it's going to culminate to the perfect storm. Like you guys brought on here and you're talking about, the yield curve over there in Japan. And like, that's the first thing we jump to, right? We'll set that aside for a second. Yeah. If you just had inflows on ETFs, with where the current supply is on the market, I think that that's probably a realistic price target for XRP, somewhere between 10 and 15 bucks.
Now let's get into the Ripple escrow, because I think this is also very important. There's a lot of pre-allocation narratives, and we can talk about that if we have time later on. But what would happen to the company Ripple, just broadly, if they were sitting on an escrow where each individual XRP token is worth 4 digits? Because now Ripple is a global superpower, and I want to hear your vision for that.
Well, they just raised capital at a $40 billion valuation from Citadel and Fortress. Pretty significant. They just had a tender offer that they bought back shares because they believe they're going to be more valuable at $250 per share, which is actually where that last round was as well. So for those institutions to be adding additional capital for equity in Ripple at this point, they also think there is a lot of upside. Otherwise, they wouldn't be doing it. That's why they make investments, to make money, or strategic alignment. It could be both. So yes, to your point, the escrow, if Ripple continues to manage that, they would be the global liquidity provider. They would be the backstop. They would be the lender of last resort. We know that Brad Garlinghouse and some other people from Ripple met with the IMF in 2017 because there's photos of them and Christine Lagarde when she was still there before she became the head of the ECB. I don't know that they get to continue to manage the escrow at those valuations. I think that there might be some exchange, like you talked about with the NDAs or pre-allocation, where somebody else ends up managing that escrow. But that does not include the 5 billion XRP that Ripple themselves use for their products. So, at 5 billion XRP at $1,000 a piece, that's $5 trillion on their balance sheet. That would automatically make them the largest corporation per market cap in the world, just valued by the assets on their balance sheet. And if that was before they go public, I think they're probably going to be the highest value public offering, which I think will be a direct listing. I don't think it'll be a traditional IPO, but I do think that they will eventually go public. But I think it's going to probably be at a super exaggerated valuation post price appreciation for XRP, like you mentioned.
You know what I find interesting too is there is a former employee, Bob Way, who I got the chance to interview at XRP Las Vegas back in 2023. And he had some really interesting statements of August of this year. And somebody said, what's the end game? And he stated Ripple being a super global neobank with the XRP ledger being the base layer for all global economies, essentially a base highway where every country gets access to that highway. And Ripple is the one facilitating a lot of that movement here. Johnny, I wanted to give you a chance to ask a quick question and then we'll get right into it.
Well, yeah, so I know, Jake, one of the things our audience always asks us, right, whenever you're talking about that $100 prediction by the end of the year, it's with such strong confidence. And people want to know, where is that confidence coming from? What is it that makes you so sure that $100 will happen by the end of the year? People want to know, Jake. Inquiring minds want to know, Jake. So I gotta ask it.
I've had I think I've told you guys this analogy before. I feel like I am an Indian on the campground, and the shamans are all in the teepee. And occasionally, a shaman will come out, and I'll get to talk to the shaman for a little while. And this includes people from Bank of America, Citi, Goldman, BNY, R3, Ripple, other institutions and enterprises. Because we don't just we have multiple subsidiaries underneath Digital Ascension Group. Our main vertical is the multifamily office and the wealth management, but we also develop other blockchain technologies for private markets and other things. And so through those conversations, I'm able to discern and have additional context that I don't think if I was just in one of those verticals, I would get. And so because of that, the shamans, I've never gotten like the full story from one shaman. Okay. But they will give me hints. I will ask questions to see their visceral reaction on things. And there's a little golden nugget every once in a while. And I have a critical thinking. I think I'm decent at critical thinking. Probably not the best in the world, but I'm decent. And so I'm able to put things together that maybe other people might miss. Okay. And so through those conversations, that's what gives me the confidence to come on here and say that I'm extremely confident that XRP will be at least $100 in the very near future. Again, pending certain events taking place. Okay.
So what are those key events in your mind that, like, when you say that, right? Because I know they want to know, what are you in your mind, the 2 or 3 things that got to happen for that theory to hold true?
The reverse carry trade has to unwind this year before the Clarity Act is passed. That is the main catalyst that will then transcend all the other dominoes that would cause a supply shock to be able to push the price to the valuation that I'm talking about.
Gotcha. Well, Jake, thanks, because you confirmed the fact that we've always said Jake knows more than most people know. And obviously, and you're right. Like, I get it, right? I'm sitting in there with meetings of technology, and you're having a conversation, and you get to hear little pieces of things. I'm talking in my business, not in this one.
Yeah.
And you can then kind of put together what you're hearing here, what you're hearing there, and you kind of get a sense of, oh, I see where this is going. And I think that those insights that you have are very important. I don't think people understand that you're getting to talk to the pieces here and pieces there, and you're kind of puzzling it together and saying, okay, from what I'm hearing and where I think it may go, this could potentially happen. And then you're relatively confident.
Well, I mean, so I've talked to MasterCard, we've talked to Visa.
Confident. He's very confident, right?
That's I was going to ask you to say, give me your percent, like 80%, 90% confident. I know it's a tough one, but I know people want to know. So if you want to share
99.9999999.
That's so much.
Will spaced out ETFs hinder a supply shock? I think it's a great question. We kind of addressed it earlier, but thoughts on that?
So originally I thought that. I thought if they leak them out slowly, we would see the price move slowly, but I think that they're going to bleed the OTC and dark pools dry through a couple ETFs, and then you're going to get BlackRock and all of them hammered at one time. Maybe right after ISO goes live.
That's November 22nd, just to outline that.
Yes, it is.
That is 4 days from today, what you just said, which is great. And Johnny, one quick point, because we talked about it yesterday. Look at the inflows. When BlackRock launched their Bitcoin product, 100 million on day one, Canary Capital, less than 1/100th the size. When you think about assets under management, did 2.5 times the amount of inflows for the XRP product. So it goes to show a lot of demand and more than we even saw for Bitcoin. Is Ripple competing with Swift, or is Ripple working with Swift from your perspective?
Well, so you guys reported on my my comment on my live, which I thought might end up getting me in trouble, by the way. But Brad put out a statement to his shareholders where he talked about that in his shareholder statement, where he said that they used to feel like they were competitors to Swift, but today they do not. If you're looking at Bob Way's vision, they are actually a supplemental component to Swift, or more of a bank or institution that may operate working with Swift rather than a competitor. And you've also had Brad talk about, he thinks that by 2030 they'll have 14% of Swift's volume, which is not that much. And so you're going to see an adoption from Swift, I think, utilizing R3, settling through XRP for those transactions real time versus, working with Ripple to do that. And again, that would also double down on the fact that XRP is not a security of Ripple. There would be other counterparties leveraging the asset to facilitate transfer and part of their business rather than just Ripple alone. So they wouldn't be a monopoly on that side of things, which we know that the government doesn't like monopolies.
Absolutely not. Why would they ever? Right. So I want to give a big thank you to Jake. That's the greatest way to end the show. If you enjoyed this content, smash that like button, subscribe to the channel, and we'll see you all in the next one.